Good morning, everyone, and welcome back to this new edition of the Daily Analysis. Let's quickly take stock of the situation. The week had basically ended with what we could call a good sideways movement, but then over the weekend a piece of news came out that stirred things up a bit for yesterday's opening of the regular trading hours. Even though it was Memorial Day and both London and the United States were closed. In short, the market took advantage of the opening for a nice upward surge following the postponement of the tariffs on Europe by the United States, a postponement that, in my opinion, just kicked the can down the road a bit, because the real issue will come to a head soon next month, and that's when we'll see what happens. So definitely this news has set off the movement we're seeing, especially on the European indices. The DAX, for example, is once again hitting all-time highs with strong surges, and so they're experiencing this situation right now. The flip side of the coin, in my opinion, is always the same, because we don't see the details of these agreements, of these postponements, and so we have to play it by ear. So the market right now is moving forward because it has reacted positively to this, and we have to adapt, but we always still need to keep warning bells ringing and monitor well this whole this situation, which is absolutely still developed. Another aspect to consider is always the bond side, which continues to be a concern. I was just reading that Japan also has its own tough problems to deal with, in the sense that there are liquidity issues with life insurance holdings that are owned by many pension funds. And if the yield on the very long end of the Japanese government bond curve keeps rising, these pension funds risk collapsing. As a result, they would be forced to sell off a whole series of Japanese bond assets, with all the consequences that could then arise from this, because obviously it wouldn't just drag down the 30-year bonds, but it would pull down the entire bond sector. So maximum attention, I repeat, maximum attention to this bond side, which in my opinion is, the vulnerable side of the chessboard at this moment. Perfect. That said, from a macro point of view, today there's the index of, if I'm not mistaken, there was the US Consumer Price Index, if I remember correctly, if I'm not wrong. In short, it's news that shouldn't be particularly market moving. And then tomorrow we'll have Nvidia's quarterly report, basically the last of the big ones to come out, and it should complete the picture. Again, I don't expect any major movements except maybe a few bursts of volatility in the phases following the release of the data. Perfect. With that said, let's obviously take a look from an operational point of view. As we were saying, the current situation sees the markets making a nice upward push, even though there isn't a lot of volume behind it. So we'll have to wait a bit for the opening of the US markets, which reopened today after the long Memorial Day weekend, as we mentioned. We'll need to see for a moment how the market participants interpret these new elements that have become known. At the moment, let's start with Nasdaq. We're already working on today's maximum value area for my range. Of course, we also have the weekly levels that were published promptly this morning. We need to wait, because right now the market could definitely linger here a bit, and at the opening it might go on to test these highs around the 21,550, 21,560 area. Then we'll see, because holding these levels could definitely trigger a bit of a pullback, probably down to today's D2 area, which corresponds to this whole zone here. But it's also possible to see a move up to test the HV, which would basically be the area that more or less matches Friday's closing levels. So let's keep an eye on these areas. As for else, at the moment it's also moving along quite briskly. Here too, we've actually hit the range day high on this candle this morning at the opening of the European markets. We're working around there, and we need to wait and see how the American markets will open, whether they continue this momentum. Considering that this rise happened, as I mentioned, with volumes that weren't particularly high, we might also expect a pullback to test certain levels maybe to re-enter the range and clear out the order book a bit. These are things we're used to seeing, so let's be very careful and not jump in right away. It's not necessarily a good idea to go long across the board, because there could also be a counterintuitive move, especially in light of what we said earlier. Also, as I repeat, for now we've just kicked the can down the road and postponed things, because instead of these tariffs coming into effect this month, they're now set to start from July 9th. So we haven't solved the problem, we just delayed it. So maximum caution. As we were saying, on the upside, let's keep an eye on 5910, 5915, which corresponds to this area here with all these lows to re-enter this upper range. So let's monitor this area between the range high and the value area high. So if this level doesn't hold, if it doesn't break through, prices could easily return to test this entire area, because it also corresponds to this previous high here, these highs that were recorded and then held this level yesterday. So basically we can expect a test of the VIX area when at the high from above, and then possibly a breakout to the upside. If this level doesn't hold, prices could easily return to this area here to test this low, and basically the whole area around Friday's opening, Friday's close. So with the HVS 0 area, basically this area here that I'm showing you on the chart. Let's move on to the other two American futures, starting with the Dow Jones. Here it is, it also surged upwards, actually even more than the others, reaching around 42.3, which basically corresponds to the area of all these lows that we had pointed out several times, and which in fact it had broken through last week. In recent weeks, 42.3 has now obviously become a resistance level, so we need to monitor this resistance level. This whole area, headed the break of this area, could easily bring prices back up to the 43,000 zone, while in my opinion, if this area holds, prices would go back to test the whole 41.9, 42,000 area. A possible break of the 41.9, 41.8 area, basically this nice area we have here, which also corresponds to the whole BC3 level zone, could easily bring prices back to test exactly this level here at 41.5, 41.6. Let's also take a look at the Russell. Here it is. So basically we're recovering 210. Basically it had reached 280, which, well, I'll show you, but by now you should have learned these levels by heart. They're always the same. We've been working on them for a while. 2080 has now become resistance, so a breakout above 2080 could easily bring prices back to the 205 to 200, 2105 area. On the downside, of course, holding these levels would easily lead to a test of this area here, 2060 or even 2050. If this level doesn't hold, obviously it would lead to broader downward movements, possibly testing this area here, basically 2030, 2050. That was 2060 earlier, I made a mistake. Let's take a look at the DAX. As we were saying, it's really sailing ahead. Here it is. Here it comes. Perfect. Here it is. Basically, it's updating its all-time highs. It's made this nice move. Basically, yesterday it was, well, it stayed basically. It also started off strong to the upside with a nice gap. Basically, it moved around a bit in a zigzag, then it took off upward, and this morning at the open, basically, we're in the 24.2 area. Basically, we're already trading above important weekly levels like RD2. So holding this level here, basically the previous highs, could also open the way for moves toward the 24.5, 24.6 area. A return into this range could bring prices back to retest 23.9 and 20, and so remain within this range, which we could then perhaps define as, let's say, a sideways movement, except for this part here, which, well, was basically due to the Trump news on Friday at the open in the morning. I remember as soon as I woke up. Okay, Let's also take a look at some commodities, starting with oil. Well, yesterday it also had a bit of a sprint upwards. It recovered the 61.80 area more or less, but then basically stayed anchored there. Now is working below that level again, trying to break through. So this is definitely the area to keep an eye on, 61.80, 62. On the downside, instead, we should monitor 61.20, 61.10, because a break below that could easily bring prices back down to the 60 area. On the upside, of course, a breakout here could easily push prices to 62.50, 63, basically testing this whole area here where we saw that spike last week. Gold is what we have left to look at. Here it comes. It's slipping a little bit, obviously as a consequence of what's happening on the stock indices. With this strong move, it's slipping a bit, but nothing dramatic. It's come back to test the 3.3 area from above, so 328 is still the level to watch for any potential deeper move. In short, 3,280 could easily represent a new buying area. If we look here, it acted as resistance, but look how many times it has then acted as support. Well, even in the past, if we look, it has acted as support many times, so it's definitely an area to keep an eye on. Well, look, SPX obviously was closed yesterday, so we'll see where it opens today. Obviously, I expect, or rather we're probably expecting an upward opening, likely around 5.9, 5.8, 85, 5.8, 80. It will probably open somewhere in this area here. If it manages to recover this area here, we could basically disregard these 2 days that took place below the wave. We'll see then, and we'll readjust all the calculations and analysis previously presented, which at the moment, of course, is invalidated. It has run its course. Then maybe we'll see if we can find some other volume correlations. We still need to look at Bitcoin, which after making some nice upward moves last week, reaching 111, 112 against the stablecoin, or against the USDT stablecoin, well, it hit 11.8 only to recover afterwards. At the moment, it's working right around the 110 area, which represents the base of this whole area of highs. So let's keep an eye on it. On the downside, of course, we need to keep an eye on this area, which, by the way, has already been tested. But as you can see, the swings are getting more intense, so we might expect a possible breakout on one side or the other. At the moment, you can also identify a clear range between 107 and 110. Roughly, with some extensions up to 112. So this whole area should definitely be considered as a range for now until there is a breakout on one side or the other. Perfect, we've reached the end of this daily analysis. As always, I invite you to leave a like on the video and follow me on social media. We'll catch up later in the chat. Thank you all for your attention.